Yo, 365, shake my hand, and welcome to another video. Long-term analysis. I've been doing this for a while now, probably over a week. I've looked at a total of 19 assets, giving you the full throttle of price, where price has been, where price is, and where price is going. Why should you watch these videos? Because where price is going is where you're going to make money. You're trading the future all the time. When you sell an asset, you only make money if the price goes down. Goes down where? It goes down into the future, same as buying. That's why these videos are absolutely important. And when you realize it now that today we're doing AUDNZD, which is asset number 19 that I've looked at, and just as quickly as possible, I want you to understand. So I promised you that after 20 or so assets, I'm going to do a special video now called sequence alignment. I'm going to teach you guys how to put this stuff in a table, so that you can actually see markets from a different perspective, right? There's a lot of stuff that institutions do, right? Chart analysis is one of the very last things they do, if at all they do it, because remember, they move the markets. So it's important that you get equipped with other tools that give you perspective, right? So if you're only watching this video for the first time right now, look out sometime this week. There will be a sequence alignment video. I don't know what the title is going to be yet. I still have to sit with the data and create the video for you, but it's going to be extremely educational and informative. And we're going to summarize, but more importantly, map out in a different table format where price is going for the first 20 assets I've looked at. I've looked at Euro USD, Pound USD, USD JPY, USD ZAR, Euro ZAR, USD Swiss franc, Euro Pound, AUD USD, Euro Swiss franc, Euro JPY, USD CAD, NZD USD, AUD JPY, Pound JPY, Euro CAD again. Well, no, not again. Euro CAD, sorry. AUD CAD, AUD Swiss franc, and at some point I also looked at gold, right? So all these videos are there on the channel, right? So quickly go through those analyses. I try to keep the videos as short as possible, and then we can make sense of what's going on. After the sequence alignment video, you can now then go back to these 20 assets I've done for you and start to map out your trades, right? You don't have to wait for the war rooms in May. You never ever have to wait for Leroy. Now, your trade in life should never stop because of Leroy. I am not Moses. I am not a God. I do what I can with the limited time I have, and I love growing my community. But I also, at the center of it all, is your individual success in this journey, right? So let's just keep an eye out for it. By Friday, Saturday, we'll be out on the channel where we kind of like group all these assets together to get a better bearing on the long term, what trades to take on the intraday, what trades to start swinging, what swings to develop into positional trades. We'll do that together. All right. But today we are looking at AUDNZD. Right. So as usual, and I said all of this with the my FX sentiment book there. I've just been looking at this just to kind of get a taste of where retail traders are. And you can see the AUDNZD. Retail traders are short on AUDNZD. About 79% are selling this asset, which makes up about 12,000 positions, which makes up about 2,978 lot sizes to the downside. And about 21% of retail traders who are currently trading this asset are long, which only makes up about 807 buys, right? So that's only 3,585 positions, right? So the majority of retail traders on this platform are selling AUDNZD. So I show you the sentiment, not because we want to copy the sentiment. We hardly ever want to copy the sentiment. We want to generally find what smart money is doing, and most of the time smart money is either on the opposite side of the herd or about to be on the opposite side of the herd. And so we really want to make sure that we have our ducks in a row, right? So 87%, 79% are selling AUDNZD. And from just looking at the structure here, I can do, it makes sense, for the sell. We'll see what happens at the bottom. But let's quickly go back to our charts of 2022. Those of you know when I'm doing my war rooms and I'm trading live with you guys, I love using the FXCM, both the actual account show because you can link it to TradeView, but also for analysis. And I remember, we had this beautiful, beautiful, beautiful sell last year. Risk reward ratio of 1:9, or at least that's where I came out. But you can see price kept going down, and ideally, none of my buys were triggered down here. There's AUDNZD last year, and I think this sell happened sometime in October. I could be wrong. Yeah, there we go. 11 October, textbook sell. Those of you who've done the course, this is the stuff. Module 1, cleaning balance, right? If you draw your supply carefully, you know there's the pick there, there's the body. After the body, you get price coming back in, you've got price leaving, you've got fresh touch, and then price just kept moving and moving down. And if you didn't believe me the first time, go through all the war room videos we did. Markets gave you multiple, well, not multiple, but at least one more chance to enter this beautiful down wave, right? And that's the thing about swings. Swing trading is fun. It's much more slow paced, so you can actually get a hold of your emotions, but there are only a limited amount of perfect swing trade entries, right? Anyways, enough of the glory days. We now need to focus on where the money is right now in the year 2023. All right, so quite a bit has happened. Markets have dropped down. Markets have then returned to, untapped supplies. So back to the sell area here, where markets started to fall in February, and then markets tried to come back up. But again, markets now dropping. This is where we are today, where 79% of retail traders on my FX book on real accounts are looking to continue this downtrend, right? And so if you've been a big fan of this series, you know that we generally like to start at the very, very beginning. We want to understand the bigger, broader picture, right? So that our bias is well informed. So we're going to start AUDNZD on the 12-month chart, ladies and gentlemen. One candlestick on this chart represents one long year, right? And this goes all the way back to 1982. Very ugly chart. Principal supply here, right? We'll talk about principal supplies in Module 3, but there's not much going on. Outside of this, you can't really talk about a major turning point demand, right? Markets have just been hovering in this area, 1989, 1992, came back again in 2000, came back again in 2011, and this is where price is right now. And, for the most part, one could make the argument that minus consolidation, price generally speaking is trending slowly but surely to the downside, and you can see that by the fact that over a long period of time, price has a tendency of taking out its lows. See here? Price has a tendency of taking out some lows, right? This was the first low where price went lower, then price went really low here, and then price over the last few years has gotten even lower, right? This is 2015. Price comes back to retest these lows here. There's like a hidden demand, right? And we call this hidden demand when we look at long work structures, but we break them down on our multiple time frame analysis, right? So 2020, the markets start to leave, right? But it's not the type of major turning point demand that I teach in Module 1. And so we shall see. Do we think that AUDNZD for the next few years, right, will be making a return to the supply? Well, it does, after a long drop, have a reputation of wanting to come back, right? Remember, this is going to take time. This is a recent candlestick, but that most recent candlestick is the year 2023, and we still need to wait until December for this candlestick to close. So there's no telling where this candlestick is. My best bet is it might try to fill this wick here, right? It might try to fill this wick here. That's as far as one candlestick could go, in such a short-term, long-term. Short-term being in the next few months, long-term being in the broader scheme of things on this particular chart, right? You're just expecting the candlestick to try as much as it can to fill up. It doesn't even have to make it all the way. It could do 2023, and then 2024 starts a little bit higher to complete filling up this week, right? So that's a possibility. But for us, it would mean that 2023 is leaning slightly on the 12-month chart towards the buy side, right? So we come to the 3 months and we try and look for proof of this. 1, 2, 3, beautiful, right? So we've got in 2021 October some type of demand that is built in. How is that a demand? Please hit the link down below to learn about these things. But generally speaking, we like to look for specific type of imbalances, right? There is another demand just behind it, which is April 2022. Remember, most of your risk-on assets would have significant demands towards the end of the month of March, beginning of April, in 2020. All risk-on assets, Euro USD, Pound USD, all that kind of stuff. If you go to the charts, you'll see a big demand in the month of March. If you go on the 3 month chart, remember the second financial quarter starts in the month of April, right? So one candlestick here represents 3 months, like January, February, March, that's one candlestick. April, May, June, that's another candlestick, etc. Right, so we've got another demand here, the 2020 demand, right? And then we've got price coming back into this area in July 2021 and leaving in October 2021, and then price coming back into this area in October 2022. Wait a minute, that's crazy. Why is it there repetition? In October 21, price creates a demand. In October 22, a year later, price comes back. In October 21, a bull run starts. In October 22, price drops. If you've been watching my video, I just need to talk to you guys about a seesaw effect, right? Markets take profits. They have to take profits. You can't just buy forever. You gotta bank money for your clients. You gotta remove money from the markets. You gotta lure in new customers, essentially, right? So remember the rules. Banks think in 3 months. Take profit in 1 year, generally speaking, roughly in a 10-year plan, right? But as they were taking profit, so much selling caused a bearish engulfing pattern, which fell straight into a demand. And then the next financial quarter, which is the beginning of this year in January, made contact with that so-called supply. And so this is interesting because we have an engaged supply and an engaged demand. Where is price leaving now? Price is leaving a demand right now, all right? Price left a supply in the previous financial quarter, which is January 2023, February, and March, and now in April, it's starting off very strong, right? This is a 3 month candlestick, so it's too early to count our chickens. Please don't forget that. Remember, this candlestick is comprised of April and also May and June. January, March, April, May, and June. May and June still need to happen for this candlestick to close. Right now, it looks like we're going to get a strong bullish engulfing pattern, which is in reaction to October 21 demand, which was created in April 2020 or down here in January 2020 area. So if these demand areas hold, then what we need to see by October 2023 is this supply being either challenged or being removed. And by challenged, I mean challenge. Then we're going to get assets moving towards their profile, which is to the downside, right? Either coming back to bang this demand a little bit here and continuing this consolidation pattern in these areas. So we've got a tight playground, right? A really tight playground between where price is right now and where price could go. And if you start thinking like this, right, there's 2,000 and 2,462 pips between the next big supply. If you start thinking like that, you can really change your financial outlook in terms of your business sense of trading. You really now understand the units at risk, the amount of pips there, and now you really want to center your trading strategy to give you the type of entries you deserve. Right now, moving on to the governing time frame. This is the monthly chart, very beautiful, clean imbalance. You can see. Excuse me, if I tighten my area of value, it's going to look like this. If I talk about the greedy bankers and hedge funds who like to throw us off, area of competition is going to look something like that. And now I've got a bullish engulfing pattern, price coming down, making contact, the 3 month demand, which is also the same as a monthly demand, as we are starting to figure out here. Clean bullish engulfing pattern touch right here, right, which is probably the month of January or something, December 2022. I apologize, January is this month here. Markets coming back down there, right? So we've got a nested zone on the 3 months to monthly. We've got a nested supply on the 3 months to monthly, and we've got price moving in between. Well, who is in charge right now? That's the question. That's the mission of module 1. You have to understand the immediate controller. Right now, the immediate controller is a demand. So that means we buy. Well, not that we buy, but it means markets are moving out. We need to figure out what we're going to do. But if we're to do any buying, we need to be very much mindful of the fact that this is the type of distance we're looking at, right? From somewhere here to somewhere there. It might take a couple of months to get there, but you know, and it's going to be up and down, up and down. But right now, there isn't any other supply I see except for this higher supply on the governing chart, right? I just want to draw this across, if these areas affect us. No, they don't. They really don't. Just pop the supply on the left. Gentlemen, if this supply gets removed, we're going to see the run of our life. We're going to see that confirmation I spoke about on the 12-month chart, where price might be itching, right? Itching to fill. Remember, I said price might be itching to fill this week because there's really not much up until price gets somewhere here. So if I draw a horizontal line somewhere down here, look at inspiration golfing pattern. Let's make this line thick and yellow, and so you can see what it looks like on the monthly time frame, right? And I come here to monthly time frame. Then if we remove this supply, right? This is where we're coming. We're literally coming here because, like I said, there is nothing stopping price here. So if we remove this supply in 2023, we are coming here. Now, if I am right, and I don't know if I am, because I am not the oracle. Yes, I have an impressive win rate, but I'm still not the oracle. But if I am right, and I understood the power of long-term play, investing, and using this opportunity to leverage money while accepting all the risks as Leroy. If I accept my own risks and I understand the purpose of my stop loss and I do the math, if I am right and give myself a time frame of say 2 to 3 years, who knows where price will be by then. And I start to load up consistently every single time on the daily time frame, price creates a valid demand. If I was to build in a mechanical system where every time there is a valid demand, I buy and I keep buying and I let my buys ride, right? And as soon as my buys have moved consistently for about a month or two, I log profits to secure 1:3 so that I never make a loss. And my 1:3 profits covers my cost, covers my swaps, covers my commissions if you're to broker with the commission. And I just let price run, let price deal with this area and hopefully not bring price all the way down to zero me out, right? And I just let price run up until here. This trade by itself will change your life. If you were Leroy back in the day, this is what you'd have done. Had you done something like this and held a trade for at least a year, you might have been inspired to start a trading academy called 365 because you understood what that actually meant. If I was you, but I'm not you and you're not me, right? The other thing to do is to first buy up until we get into this supply, which is a safer play, get into a lot of swing positions, take profit here. This is a much more sensible thing to do, which is where you probably should start if you've never really held trades for a long time. As price takes out this supply, we will be sure for potential retracements either inside the supply or a little bit lower. As long as you have a sign that the supply has been taken out, then we go up, right? Then we really hold our lower buys when the supply is gone. That's what I'll be looking to do. I'm looking to buy up until here. I'll be looking to catch the train all the way up. Please don't forget this, right? Because I will look at NZD, AUDNZD in war rooms the rest of the year. But don't forget, I told you now. Right now, moving down to the weekly time frame. The weekly time frame is showing very similar stuff still. A nested supply within the governing supply within the 3-month supply. Still a demand now. However, this is new. This is new. This is new. Let's just delete all these other things. So this is new. Can I quickly go back to the monthly? I just want to see something. You see here on the monthly time frame, we have a reaction to a demand, right? Here. This long wick is a reaction to a demand. On the weekly time frame, that long wick is the creation of a new demand. That long wick is the creation of a new demand within a monthly demand. So buying is protected buying. They have each other's backs here. Instead of this being the only zone holding the zone, fine, you're going to test us, get sure, but we're going to create a new buy order so that when price comes back here, it cancels out that glass effect because we added more buy orders to assist price in going up. So the weekly time frame, we have a demand zone here, right? Number one, which was not there in the monthly, and number two, this is also not there in the monthly. On the monthly time frame, we just have price leaving. On the weekly time frame, we have yet another basin, another creation of a buy zone. And this is actually important because then when you start to understand price doing this, you realize that markets are building a case for the buyers. The bulls want to make sure that one day when there is that retracement I spoke about, one day when supplies are in control, there's a lot of resistance as to how low price can go, which is important, right? AUDNZD just below our proximal line that we drew on this was on the 3 month chart. Let's go to the 3 month chart. Just to remind ourselves, no. So you see this white line, we drew it on the monthly time frame. So we tightened our supply zone and we added an area of competition, right? So I'm going to remove the area of competition, but I just focus on the proximal areas, which is the close of the green candlestick, like that now, because I see that's what it looks like on the daily. Go back to the daily, no one weekly right now. Go back to the weekly time frame, right? So you can see that this is the proximal line from the monthly time frame where price can easily start to get rejected. On the weekly time frame below that white line, prices then created yet another supply. Careful to break the previous supply, but still want to go down nonetheless. It's important to note this because we now know where the buyers are retraced. Remember, the buyers are in charge. Buyers bought here. Now they need to retrace back to get lower buys. They create a demand zone to facilitate lower buys. When price comes to these lower buys, they create more buying pressure. And as a reaction to that, they have an area of value out of alignment, right? So this is a weekly supply. You see this weekly supply? You won't find it on the governing chart. Show me a governing chart that supports this. This is not a valid supply on the governing time frame. That means it will get broken. I don't know when, but I know it will not stand the test of time. Now, as price is now leaving this area of value this week, as of Monday, which was yesterday, I'm making this recording on the 25th of April. You're most likely going to see it on Thursday because I just saw what my calendar looks like for Wednesday tomorrow. And yeah, it's just meetings, no trading. Well, whatever. But anyways, so markets now are creating a bullish engulfing pattern at the beginning of the week. And we need to watch how this case is going to close this week towards the end of April, and noting the fact that there's some strong buy power there. I'm going to go to the daily time frame just to gauge. This shows just momentum it dropped a bit, but not something that we should be really concerned about yet, right? Yet. So we'll see how the week ends, how this weekly candlestick ends. But there is definitely a supply right here at the top that price is drawing from, and we need to see the supply getting tapped in the move, and then we can start to contend. Now this line here is the monthly distal line, and I'm just gonna really tighten the zone now to the weekly. You can leave the monthly distal line because price likes to react to these lines. This way markets will create equal highs, and you won't even understand what's going on the daily time frame. You'll see price get here, and then price drop, and then price come back here, and then price drop. And all of a sudden, most price are stuck here, and they're looking at this as reason. All the retail traders are starting to load their stop losses. The next time markets come back, market sweeps, takes everything, traders using a valid supply, and then markets then drops for real. Everybody's stop loss gone, everybody and the institutions move down, right? So this monthly distal line, keep it on your chart and know what price is doing there when you start to recognize it. But first, we have to deal with this area, right? Moving on to the daily time frame. Right, and there we go. The daily time frame, we've got break of market structure, break of a bullish engulfing pattern, markets moving to the downside. The only next stop is the daily demand within a weekly demand, so that should be good enough. And so we should see price get here. What we don't like is the fact that markets are currently parabolic from about Wednesday last week to Friday, Monday, Tuesday, sorry, dropping like a nuclear bomb, right? So we want to start to see some distribution between Wednesday and Thursday. Markets end here. Maybe markets end the week here, right? And then maybe we're breaking back. So that purely depend on the structure that price gives us, or here. Right, on the daily time frame, we acknowledge that it is this little cluster that's doing all the selling, right? And this is that area that's starting to create equal highs, potentially that might need to get broken later on. But on the daily time frame, within this weekly supply that is not in alignment with anything, we acknowledge that the real daily supply is all the way up there, right? So this shouldn't, last too long. If I draw a Fibonacci for my bullish side, there, I draw a Fibonacci, price is really eagering down, right? And you can see my golden area is somewhere here. There you go. Right? So look out for that, man. Look out for that. Look out for that. And then when we if these buys are working to get distribution, then look out for the supply to slow it down. When the supply gets done, look out for the order blocks price is going to create to the upside. When the order blocks get created, then you're aiming all the way up here. You can see that proximal line has already done what I said it's going to do. Remember, I said the money proximal line is going to create support and resistance vibe. There we go, resistance, breakthrough, oh, support. Oh no, now it's resistance, right? So look out for this. This is going to be our liquidity hunting ground. Markets will hunt a little bit here before making their moves here. Right, so AUDNZD, I've kind of like mapped out the next 2 to 3 months of what price is going to do. You need to now be able to read these order blocks when they come in, when they create it and trade along them. If you don't know how to do that, hit the link down below, and I'll see you in the next video. 3, 6, 5.